Hi guys, this is a video on clearing up trading confusion with multiple time frame analysis, in other words combinations, and I'm going to talk about inside out trading and outside in. So what we're talking about when inside out, outside in, what does that really mean? An outside is a top down analysis point of view, where an inside is a microscopic point of view expanding outwards. So top-down analysis is the outside, and then looking for a particular setup is inside a bigger time frame, like a lower time frame setup inside a higher time frame, is going to be your inside perspective. And we want to look at the combinations to use so that we're either being aggressive or we're being conservative, as in confirmation style trading. So let me talk about the aggressive and use an example at this moment this week, just to give you a clear idea. Let's look at the daily as a higher time frame in this euro dollar. I've posted this week about this particular setup. Whether it works or not to completion, another story, but nevertheless the principles still apply in all my trading this way. So if I'm looking at an outside in perspective first of all, and then we'll look at the confirmation versus aggressive. We've got A, B, E. So this is a setup that I want to be shorting from here. Now, if I'm going to do an outside in approach, and this being my high time frame, I need to start to look at what structure, the right combo time frame coming up here to give me a confirmation trade. So if I start coming down the time frames, initially we had this move up, but we wasn't at this particular point. And then by the time we dropped and rallied into the area that I'm looking to short, we have the A, B, kind of E trend line here, just a trend line here of an uptrend. Now the real confirmation trading is once that structure moving up has broken, which is happening right now. Okay, so now the structure up, which is this big trend line here. I'm just going to remove this one because that was my prediction. This big uptrend here was the major structure going up, and you could look at it as a channel if you want. That makes it easier for people. Once we've broken that, now we're in sync with that daily, and the structure was pretty much on the 240. Now we also had this structure here. So as we got closer, I started to lean on the 60-minute 240 structure. And this would give you a kind of aggressive confirmation. And what I mean by that is we've not changed on the 240, but we're at this particular turning point. So now I'm going to start looking a little bit aggressive. Now, if you wait for this trend line break and close below, then you're in confirmation. Anything below here, you confirm that the 240 or the 60, if we go to the 60, we're looking at area. Once it closed, we can then start to short. You're in sync with the daily ABE, that area. You're in sync with the 240, and sorry, the 60-minute break here. So we're now starting to be in sync. So if you was day trading on, let's say, a 15.5 or 1 minute, you only want to be looking for shorts. However, the big 240 A, B, E needs to be broken to be truly in sync. So, for example, now I can just already see this nice supply level. There was a supply level here that removed to create as in sync, which price reacted from, and we've got a new supply level. Doesn't mean it's always going to work, but I'm trying to get you to be in sync with full confirmation. So this is an area, and I spoke about this on one of the videos last week, and I've made some more videos this week most recently. So if you're just watching this on the 13th of October 23 or close by, look at the 12th, the 11th, and a video around about the 7th, 8th last week. It all talks about this particular setup and what I'm looking at. But I'm trying to clarify what is confirmation and what is aggressive, and doing the multiple time frame combinations. So this is now more conservative, more safer to start to look for shorts because we got confirmation. Now, if price breaks up here, the structure on the 60 is changing, but the 240 is in sync. So if we rally from here, I would start to look at the 240 candles because I know I want to either be in a range bound or a shorting scenario. And in this case, we have got a level, so I want to be shorting that area. I want to be watching the structure here because I'm in sync with my daily trade. The 240 is in sync with the daily. The 60 minutes in sync with the daily until this sort of breaks, and then the 60 might be out of sync. So if we want to trade lower time frames, we really want to keep all our eggs, all our ducks in a row. That's true confirmation. The problem with that is you don't get the best reward to risk from the big daily, but you might get some good lower time frame trades. So if I'm a day trader today, I'll be looking for shorts. So now we've got a 240 in sync, a 60 in sync. We've got a nice supply level. How do we trade it? I want to look at this candle, this move up, because whatever's going on in this candle is not in sync. And then all I'm looking for is in these candles, as I'm dropping down, is the structure. So let's go down. Right now we've got 5 minute structure in or approaching this area. This is the true trend line. This is the true strength. Once you're below here, then everything is confirmed. Everything. But your reward is much lower because targets are normally near the extreme here based on the data, so the 6240. But on the daily, my target is all the way down here, which would be aggressive to go for that because we don't know what's going to happen over the next few days. So you need to play every setup with the particular time frames you're looking at. So if we're in sync with a 240, 60, as in this case, my 15 is not giving me structure, but my 5 minute is. And even in this, if you want to start to go confirmation aggressive, which means we're going to go against a 5 minute trend, but we're looking at this strong move up. So we're now into 1 minute / 60 minute confirmation aggressive. Then maybe you want to look, we've hit the level here, you want to look at that structure. Okay, and then what I look for is a removal of the nearest demand because demand is below. There was a slight take out of that demand, so technically we've removed demand, and now you can start to look for shorts. So basically, a break of a trend line is kind of a very gentle way of looking for potential short setups. We're starting to get in sync with the break of the trend line, but the removal of demand gives us the true green light to be we're completely confirmed. So when we come back to the daily, let's talk about complete aggressive. So when we're moving up here, the 60 was up, the 240 was up, so 240 was up, the 60 was up. Once we broke that confirmation, but because we're in a higher time frame, I was taking purely aggressive trades, looking for this move up and a break of structure only from the inside out. So I'm going to zoom into these areas, we'll use a 5 minute. So now I'm going inside out trading, which is pretty aggressive. Okay, so this is the moves that we had a move up here initially that I was potentially looking to short. This move, so from down here, this strong move up, and in this particular area here, I was probably looking at 1 minute charts, and you can even get in at the extreme, but it's very aggressive. But once you've got in here, then you work from the inside out. You need to allow the trade to breathe. See, that means you don't move your stops too quickly. You can take partial profits. There's many trade management, we're not talking about that, but this is the inside out trade. It's a 5 minute, even down to a 1 minute here. Now, as you can see, price come back and actually went higher into an area of the higher time frame daily ABE. So we had that pretty much in the end from that high. Once we broke that, we are pretty much kind of like a confirmation of the 1 minute, but super aggressive. Okay, but you're starting from the 5 minute or even a 1 minute, you could inside out. In this case, I was using a 30 minute time frame as my kind of inside out approach, and I was looking for the removal of this demand, and then I took the pullback just in here, and my stop was only above here. And then you have to leave it to breathe. Now I'm starting to work from inside out. So now I'm going to my 60. And then we had the 60 minute level here. Then I go to the 240. and now we've got a 240 level. So now we've got confirmation after my aggressive. So the aggressive, you will take a lot more losses, especially if you're no good at it. If you don't understand it, it hits your emotion, your psychology very strong. But the confirmation allows you to wait for everything to be in sync, and allows you to take smaller sort of profit trades, but with more win ratios. So therefore your reward to risk is lower, but your win loss is higher. Now, the same thing on this move up here. When this 240 was moving up and the 60 was moving up, after we broke initial trend line down here, all these trading to this area, I would have been using 1 and 5 minute charts to buy until this happens. And then you want to be thinking about, right, okay, potentially there's something happening, but we've not removed the 240. But you want to be, if the 60 is down, that's when you want to trade your 5 and 1 minute. You really want to not trade your 1 and 5 minute just in the direction of a 240. You want to wait for that 60 to be in sync somewhere along the line. Make sure the 60 is trending in the same direction. So how would I play this down here then? Let's look at this confirmation and go for the aggressive confirmation first of all. So this is a 1 minute break. We've removed the demand, so technically anything you pull back here could be an entry. You could even enter there with your stop above here, which is about 12 pips, coming down to the lows of about 20. There's a nice 2-to-1 trade if you was to short right now. You could wait to get a better entry by sometimes using an ABE. So once prices come back to an ABE, you could short here with your stop, which is quite aggressive above here. If price breaks this 1 minute, you can watch the 1 minute structure again for a break and entry and get a better price. Stop is always going to be above the high. So you want to be in this direction. You want to be breaking trend lines and you want to be under trend lines. If we start to break here, which is fine if you remember your stop is here if you're already shorted, but now you could really take any shorts in this area. You could watch the green candles, wait for a red 1 minute, and then stop above the high. Or you might get a structure and you're waiting for the break of structure again, and it makes a new high, which saves you a loss because you've not ended the trade. Or you get up to here, break the structure, enter, and you've got a better reward to risk down to here, maybe a 5-to-1. So as you see in this case, this is live, we're starting to break this. Now when I have flip zones and I'm in sync, what was removal of this demand becomes supply, and really it is this, because that was the removal. So any trading I have, my stop is here. Okay, if we pull back to here and make a new low, then we've got a new ABE to lean on. So you're starting to keep in sync. You're only going to be looking for shorts. But we haven't had that happen at the moment. Now, let's just say price rallies higher. Then we need to come out. Let's come out. And if price puts in a new high, let's say price puts in a high like this, we can look at the confirmation aggressive, because this is still following that initial 1 minute / 5 minute uptrend here, but we've not taken out this trend line here, because this is really the real true confirmation. But once you're below here, your reward is much lower. You might have a 1-to-1 or half-to-1 trade. Okay, but that's how you increase your winners and reduce your losses. So if we, as this is a live one looking at the moment, I'm expecting it, if it's going to do my pattern play out to a target down here, and my targets are normally based on the solid body candle of the 60, which I'm looking at, or the 240. We could even use the 240, so you might want to be a little bit more conservative and bring it up higher. But I'm happy because we're in sync in a trend here and expecting it to go much lower. How much lower, I don't know. That's a different trade management. So that is a trade setup from this level to here. We're not in the level yet, as you can see, but we're starting to get in sync with the aggressive, which is going to be this 1 minute move up, this aggressive confirmation. Okay, so you expect that if you get stopped out, you wait a bit higher, you redraw your trend line like this, and you wait again for the confirmation. Now, when price rallies really fast, and even if it's from this area, very strong into the extreme in this area, that's when I get very aggressive. It's like a magnifying glass. You're zooming in right into this area. So if we came out to a 1 minute and imagine that is the extreme up in this area, price rallies so strongly into this area on a 5 or 15 minute candles, I will watch the 1 minute structure and break, and then I know my stop is not only above the high of the 1 minute, but I will put it above the high of the level, and that is my cutoff point. I can't put my stop in any better place, and I'm as close to it as possible. So all your set and forgets should always be at extremes of the rubber band. That's how I always use my set and forgets, because if I'm stopped out, I know that I'm not trading that no more. I need to give it another day, see what market structure happens, see what could actually be developing. So for example, if I mean, this is working now because it's in sync, but if price pushes above here, I then need to watch the 60-minute structure again. So as an example, and I'll use the pen on this, if we push up and then pull back to here and push higher, I'm no longer in sync on the lower time frames. So I'm going to be very, very aggressive trying to short 1 minute here and 1 minute here until we break the trend line. Then I'm looking for the 1 minute pullbacks and then a break to enter, but my stop should ideally be above the high. And then this could still happen. Anything can happen. We're moving back into an area where the 240 daily is at that trend line ABE, which is right up here, and therefore a different kind of analysis will need to be looked at, because if I come back to the 240, we may well be in a big range. Okay, then I look at I'm not even going to discuss it in this video, but then I look inside candles. So for example, I'll be looking if we got any inside candle, like this weekly is an inside candle. That was an inside candle because it opened and closes inside the other candle. We've got inside candles here. So I need to understand where my fake outs, my liquidity sweeps are, what the accumulation is developing, to use the appropriate strategy. But the principles of inside out and outside in is the fundamental technical analysis skills that I use as my indication of when to go long, go short, if I'm aggressive, or if I am conservative, as in a confirmation. So I hope that makes sense. I will have, at the end of this video, to see if there's anything developing here that I can show you. For example, now, we're starting to, even though we've moved, this was this area where I would want my stop, we are starting to move up into this area. A break of this candle, because this big green candle, we've got a red, could be an entry with your stop above here giving you a better entry. Or if we keep making higher lows on these candles, high lows, until we take this area out, I'm still looking too short. But you can say that you are no longer in sync. We'll move it to here. You're no longer in sync on the 1 minute. So if you want to be conservative, you would let it rally and then break whatever pivot low and the trend line that you have to get in a conservative. When you're really down to the 1 minute, I tend not to worry too much about the removal of demand or supply so much, when I already know we've had a turn in price on a higher time frame. So I'm into this level. It's more like just a break. That's my indication. My stop's here. Fine. I was stopped out. Something's changing. So here's another example. Breaking the low, you could enter. Now you could have your stop here if you want to be aggressive with your stop, but the conservative stop would be above here. I'm not sure how that's going to play out particularly on here. I just wanted to understand the difference between getting your ducks in a row, which is confirmation, and then knowing when you can have or be a little bit more aggressive because you're reaching the higher time frame turning points, ABEs, breakouts, supply and demand, however you want to look at it. And then you need to go down appropriate time frames, and to do that you just look at the structure. So coming back to this 5 minute, this is actually the structure. Price could rally all the way back down to here and bounce and go higher. Okay, it can happen. Once it's removed this, then this is really the confirmation, okay, the true confirmation, okay, that the 5 minute is in sync with the 60. Okay, this is aggressive confirmation that we was looking at on this particular trend line to the upside here on the 1 minute. It's very aggressive. Whatever we was doing here is aggressive confirmation because you're moving into the area of higher time frame. Okay, but that's how you get a better reward to risk. You'll have a few more losses, which then fucks with your emotion, the psychology, which intends to make you have even more losses because you want to make your money back, and that's not the way to trade. Professional trader, you need to sit back, analyze it as I am doing, understand your patterns, and this is still a pattern that I'm looking for, with the break of removal of supply and demand and break of trend lines, being in sync, being aggressive. I know where I am. I know that I could take losses if I move my stop tighter, and I know I can get back in again because I'm within the high, so my stop technically should be over here somewhere to be absolutely safe, which means you go for a 1-to-1 reward to risk, but you only have one loss and a very small winner if you do hit it. That's it, guys. That is a video on inside out, outside in trading. So you know that when you're inside out, you're being more aggressive, but you can be conservative with that if you're on the 1 minute in sync with a 15, in sync with a 60, in sync with a 240, and in sync with the daily. So these to me is like super safe. It doesn't mean they always work, but they're nice super confirmation kind of style trading. Give us a thumbs up if you made it to the end of the video. It doesn't matter if you like it or not. I'm not here to monetize now or anything like that. I'm here to get this information out. So you're more than welcome to share it. I just want to help you guys. So this is super important for people to understand and share this for like-minded traders. You just want to learn how to make rules around price action, supply and demand, patterns, and you need to understand the whole package, which is price action, without any indicators, nice and clean. And the next battle, which is 99% of it, is the psychology. So hit that thumbs up just so you understand. If you don't, then do a thumbs down. It's not a problem. Or comment in there. It really makes no sense. And then maybe I can explain why, first of all. Then maybe I can make a better video. All the best, chaps. See you in the next one.